Let's answer some of your questions now. Joe, you are up first from Lee in Virginia. I've owned Walmart since 2015. Buy, sell, hold.
Hold. And I have had Walmart for the better part of the last couple of years. I am beginning to sell down that position. I think it is stalled out.
Well, why should Lee be any different?
Well, buy, sell, hold indicates...
You said hold, but then you said you're selling down the position.
I am selling down the position. Okay, so let's say, let's change it. Let's say, Lee, you have the same position size that I have. Then you should be selling down your position. Lee, if you don't have a position, you should not buy it. Lee, if you have a small position... I don't know how big his position is.
Let me clarify
here. How do I know how big it is?
But when he says I've owned Walmart since 2015, I mean, sorry for being specific. I've owned Walmart since 2015. Buy, sell, hold. You say hold, but then you're saying I'm selling down the position.
And I'm selling down.
For being
I'm still holding Walmart. I don't know how big the size of his position is.
Your Honor, is it at all possible that Lee's financial situation is different than Joe's?
Sustained.
Okay. The defense rests.
Okay, thank you.
By the way, what I'm doing with the consumer staple funds from Walmart, which is what Walmart is I'm buying Monster Beverage. So I'm not losing consumer staple exposure. I'm still going to hold Walmart at a lesser allocation, and I'm going to increase and initiate in Monster Beverage.
Bailiff said at $50 million.
Okay.
We'll meet in chambers after the show.
Yeah.
Ooh, that's not good. That's not good.
No, it's not for you. It's not. Stephanie Link from Jim in Texas. Is GE on track?
Well, it's up 10% on the year, so I mean, it's had a nice move, and it was up 50% last year. So I think the turnaround is still on track. I mean, you're going to have puts and takes in any turnaround story. So, you know, I'm not crazy that it's up 10% right out of the gate into earnings because the expectations are a little higher, but I still like the story for the long term.
Okay, good stuff. Michael Farr from Mike in North Carolina. Good entry point for CVS.
Mike, it's as good as any if you're prepared to be patient with this name. Their numbers are improving. They're, I think, returning to double-digit earnings growth. 70% of the U.S. population, 70% of the U.S. population lives within 3 miles of a CVS. This is a very strong company, 10 times earnings, 2.7% dividend. This is a company I can own for a long time, and I do own it.
Okay, thank you. Josh, lastly for you, I'm reading this right off Twitter right now. What does Reform Broker think about Joe Terranova stock pick, Zoom Media?
I like it so much, I just went long.
Today?
Yeah, this morning. Not because of Joe, but I love being on the same.
That's from Stock News ATM, at Stock News ATM. Thank you for the question.
So Zoom ZM.
Yes.
Okay, yeah. So I bought it this morning, and I like being on the same side of the trade as Joe. But I had been waiting for this name. It came down 35% from its high. I don't know where Joe got in, but I have a very defined risk here. 61.5, 62. The stock has bounced off of that level multiple times. That's actually the first print it ever traded at when it came public last April. We've been a user of the product. The product is changing the entire landscape for U.S. businesses in every segment of the economy. The problem is it was 40 times sales at its high. Now it's 20 times sales. I'm not saying it's a value stock. Company's profitable. Revenues are doubling. 60 million in 17 to 150 million, 330 million. We think they'll end 19 with. The stock is just, the company is absolutely on fire. The stock has been a really tough stock. So I think I own it here at 70. I'm taking roughly 8 or 9 points in risk with where my stop is. I could be wrong, but I think I'm going to be right. And as a user of the product, let me just tell you, every meeting can be virtualized. Every meeting. This is going to change the landscape in every industry. And Zoom itself, the word, is becoming part of the nomenclature in corporate America. I'll Zoom you later. Let's do a Zoom. That's how people are talking about this company's products. And when you see something like that in corporate America take hold, it reminds me of Salesforce years ago, reminds me of Slack right now. I want to be an investor. So the fact that I got this thing all the way down here, I think I'm stealing it.
You want to have the last word on that?
I want him to keep talking. He's doing a great job talking about it. Listen, I have a little bit of a head start on him in the company. I plan on holding this. I've identified the IPOs as a component of the market where you're going to have people say, okay, let's find some opportunity. You've seen that so far. The IPO names again today, they are all moving higher. But this is a quality name, to Josh's point, that actually makes money. The next discovery for them is going to be taking the product, offering it on your phone in the form of an app. That's going to be incredibly powerful to the enterprise space. Something I'm going to hold for a while.
One thing, R&D has doubled each year also with revenue. and so has SG&A, meaning they're a 10% profit margin. They could be 20 in the blink of an eye if they decided to. But wisely, another company going for scale, they're going to capture this entire market before anyone realizes what hit them, and then they can worry about SG&A expenses coming down. In the meanwhile, they're doing this deliberately. So it's profitable. It's not hugely profitable. That is not the goal right now. And I think again, I like that strategy. I've seen that work out for other giant technology companies over the last 20 years. I think they're doing what they should be doing. So it's a $19 billion market cap. I think it's the right time for me to be involved.
Nice move in that stock as well.